All right, everybody. Stocks by the numbers. Welcome back. Wanted to do a quick view here of a stock that someone mentioned a while back. I'm not exactly sure if it was back before this drop. I don't think so, but then this is the next stock on the board, right? So I'm trying to go in order for everybody, make everybody happy. Name of the company: J Long Limited. Ticker symbol, J Long Group Limited. Ticker symbol JL, listed here on the Nasdaq. Stock right now 89 cents. Hit a new low today of 88 cents, coming off a 52-week high of almost $30 a share. We have a market cap now of sub 28 million. We only have a 10.3 million in the float. The other 67% of the shares apparently are held by two insiders here. I looked at the prospectus because I have that kind of time, and as you see, we have this gentleman here holding over 57%, and this gentleman here holding over 9.5%, equating to about 67% of total shares outstanding, with a touch below 33% coming to us, the public. So they randomly paid out a dividend, which in my opinion, I cannot understand. It looks like a lot of volume flowed out of this stock here just inside of the last month or so, and the company absolutely fell off a cliff, going from 30 all the way down to sub $2, had a slight rebound back up to 3, and has slowly been channeling down and selling off. Selling off, now down to sub $1. So, a couple of things. First of all, in my opinion, the dividend makes absolutely no sense. I don't know where it came from. And if I was behind the steering wheel, which obviously I'm not, but in my opinion, if I was behind the steering wheel, I definitely wouldn't have paid out this dividend. I have no idea what this company was thinking. I know a lot of people online speculating, oh, the stock dropped big, so, they tried to kind of like reinforce that confidence by paying out the dividend, right? Because usually people view dividends as a good thing. If the company's able to pay out a couple of $1 million in a special dividend, then that usually means that, the business is healthy, stable, they're growing, they have the cash on hand, it's no problem. But they really didn't raise that much from going public, and now they paid out 19 cents a share, which equates to about 6 million, I believe, in total across the board. And obviously, it looks like it didn't help at all. Usually, when a company pays out a dividend, the stock will, for the most part, drop down. And this goes for blue chip stocks as well. Usually, the theory is, well, you're paying out a dividend, so technically you have less cash on hand, so technically you're a little less valuable today than you were yesterday, right? But what's going on here is, in my opinion, if I paid out this dividend, these numbers coming out, and again, this company posts semi-annually, not quarterly, so we get numbers every 6 months, not 3 months. But in my opinion, if I was going to pay out this dividend after just going public and having my stock fall off a cliff, and I paid this out to reinforce confidence, then when these numbers came out, they would have had to reinforce that confidence even more, right? And unfortunately, what we saw is kind of the exact opposite. So the numbers came out, stock was around 130 and change, and immediately started to drop down to 90 cents. Now, it did bounce around a couple of times trying to get back up above $1, but basically kind of stayed flat and stayed down here around the 90-cent range here for the last several weeks. And this company does reflective garment trims, heat transfers, fabrics, sewing badges. So there's a lot of different segments here to the business. But if we look at the actual prospectus, we can see that somehow the company was able to maintain almost identical revenue year over year from 22 to 23, posting 38,292,412 and 38,292,397. But now revenue chunked down even further. But before we jump into the numbers, I just want to show you some segments seem to be growing, like the draw cords here, up almost 100%. Other segments taking big hits, as you see, something like the zipper pullers down over 50%. So we have our ups, we have our downs, but as you can see, the bulk of this the bulk of these revenue comes from heat transfers. So in my opinion, if I was a shareholder from day one, first of all, I'd be livid right now, but more importantly, I would be looking for these heat transfer numbers. And the company recently posted earnings a couple of weeks ago. As we see, the company made 5 cents per share, net income 1.4 million, first half revenue 14.6 million. So if we were to double that number for the next 6 months, that would bring us to about 29.2 million. Even if we round up, let's say give them the benefit of the doubt, we'll say they close out the 12 months at 30 million. Well, we were maintaining over 38 million for years, and now we drop down to 30 million. And coincidentally, it just so happened right after the company went public. So in my opinion, I am personally seeing red flags here. This is a company based out of Hong Kong, and again, I'm not trying to ruffle any feathers or, just be that guy. But in my opinion, I said multiple times I would not be buying Chinese equities, in my opinion, in this environment. And we're looking at companies, stocks like Alibaba even, who, in my opinion, have pretty stable numbers. I know they're consistently buying back shares of stock, yet it doesn't matter, and the stock continues to drop down. So the way I'm looking at it is, if something like Alibaba is going to struggle, then chances are something like JL could definitely be kept down, in my opinion. But if we look, we can see revenue approximately 14.6 million, representing a decrease of approximately 34.9%. Net income 1.4 million, this time last year 3.4 million. But it says here, during the 6 months, revenue decreased mainly due to a decrease in the sales of heat transfers of approximately $11.8 million from the same period in 22, that was set off by an increase in the sales of the other products of approximately 4 million. So they technically didn't cancel each other out there, but more importantly, that is the bread and butter, the heat transfers, right? The heat transfers, responsible for over 25 million for the last couple of years of revenue. And now you're telling me that the sales of the heat transfers dropped by almost $12 million. So in my opinion, massive red flag right there. Expenses increased also 22%, as you see, going from 2 million to 2.4 million. They say it's because it was an increase in payroll to our staff, fees to directors, also increase in depreciation, depreciation of right of use due to an increase in rental fee for the warehouse and offices. So, in my opinion, this is just not adding up. The company's struggling here for these last 6 months with the business overall, but yet they randomly come out and they announce this special dividend. So, in my opinion, this is really just not adding up. And again, it looked like a lot of volume outflowed from this stock. The dividend did not help. The stock consistently kept slipping. Then these numbers came out. The stock slipped even more. So, now we're at a point where, in my opinion, we got a random dividend, and we have a company that apparently just reported numbers and they're down over 30%. So as of right now, in my opinion, the numbers themselves can't help keep the stock up because they were negative. So now, in my opinion, in the immediate short term, we're probably going to have to look more for the technicals over the fundamentals. Now, I know this is a new stock, and I'm sure people are going to mention in the comment section, oh, there's the lockup period that's going to be ending soon. The company went public, right, 3rd week of January. So 6-month lockup period is going to end around the 3rd week of July. So everyone's saying, oh, around July, you're going to start to see some action, some momentum come into the stock. Okay, that's fine. However, that's still over 3.5 months from today, which is a heck of a lot of time in the stock market. As you can see, just within a day or two, what can happen to the value of a stock. So 3.5 months after, in my opinion, coming out with multiple negative catalysts, I do think that we break lower and we continue to see new lows here. And I appreciate the fact that some people may say, well, they're still looking to bring in, around 30 million for the year. The market cap right now is about 28 million. So can't we make the argument that we're undervalued? Yeah, we could make the argument that we're undervalued. However, as I just showed you, the bread and butter segment just took a massive hit. Total revenue down about 35% from the same time last year. And on top of it, they randomly paid out this dividend. So what I was looking at is, we could make potentially 2 potential patterns that we could be seeing here. So first of all, if we go from the absolute bottom there, February 29th, 24, to the top there, March 6th, 24, you can potentially make the argument that we are in a descending wedge. But also on the flip side here, if we go back, March 27th, 24, top left of your screen, the O, the H, the L, the C, that is the open, the high, the low, the close. You can see the low, 90.13 cents, and then a low of 90.2 cents on April 3rd. And then yesterday, we had another low of 90.1 cent. So it's not exactly a triple bottom, but we could potentially draw our line across. We had this downtrend here the last couple of days, or we can even use the longer term trend line here at the top, but there is this flattening here, and in my opinion that formed a descending triangle, which is why today at the open you can see that we immediately dropped below that bottom trend line, tried to regain, rejected, tried to regain, rejected, and now we're staying down here at about 88.5 cents, we'll call it. But in my opinion, if we back this out, then technically the next stop in my mind should be 82 cents, and then it should actually potentially drop to the bottom of this range of about 70 cents in change. So we can continue to still see drops and new lows here, in my opinion. And also the fact that, like I said, that the company reports semi-annually and not quarterly. So there, I just feel like there's too much time in between the next catalysts, right? That's basically my point. Again, you have over 3.5 months before the end of July when that supposed lockup period ends, and people are expecting momentum to come back into the stock. That's still a long time. I know if you look online, some people are expecting like a quick breakout here, back up to like 130, 140 in the short term. Other people are possibly seeing what I'm seeing, and I'm seeing price targets of like 70 cents. I saw a price target, one guy saying as low as 30 cents he thinks it's going to go. Obviously, we're going to have to cross that bridge when we get to it, but, I have to call it like I see it. And I will say that this random special dividend, in my opinion, makes no sense. The earnings, the numbers that came out, in my opinion, they were pretty terrible. And again, it's going to take a while before we could potentially turn this around. Again, 3.5 months before the lockup period. And now you have about 5.5 months before the end of September, when the next second half of those yearly numbers are going to be reported. Now, granted, the company could have just had a rough couple of months, right? So we can turn around in September, wait for those numbers to come out, and all of a sudden the company beats estimates, right? And they're back on track. It's not as bad as it seems. We had a couple of rough months. Boom, everything's great. We're on the up and up. Okay, fine. But in my opinion, as I always say, I would have a wait and see attitude. I would wait for July to roll around. I would see how the stock reacts and what the board actually does if they, begin to sell their shares after the lockup period, whatever they're trying to do. But also, we have to keep in mind that this company was listed on the NASDAQ, and now we're sub $1, so we have the potential to receive that NASDAQ compliance letter. And if the stock does stay down and get beaten up down here in the 80s and the 70 cents for a while, then we may have to do a reverse stock split. And I know some people are saying, well, the company just went public a couple of months ago. You think they're going to, they can't do a reverse stock split. Well, let me tell you something. When something like this happens, and all of a sudden you kind of painted yourself into a corner, and you may potentially be in a situation where if you don't reverse stock split, you will now get delisted off of the NASDAQ. So, they might just do whatever they have to do to maintain the listing. Which again may bring us back to the original point, which is why I say, in my opinion, I usually give IPOs some time. That's just me personally, because for the most part, what we've been seeing recently is that a lot of them come out significantly overvalued right out of the gate. And I feel like we see a chart like this often when we look at IPOs, right? It's good for a little while. Everyone's pumped about it. Everyone's piling in. And then all of a sudden, they miss earnings, or just something in general negative happens, or an analyst could come out and downgrade them randomly. And then all of a sudden the stock falls off a cliff, continues to slip for like months on end. Maybe it'll form a wedge and break out of it eventually. But we've seen a lot of companies on this channel that were just overpriced, in my opinion, right out of the gate. And they basically just go down and down. Now, I'm not necessarily saying that this company was maybe tremendously overvalued, but I will say that the drop of 35% in revenue definitely doesn't help the situation. And now they randomly paid out the dividend. Again, in my opinion, this really isn't adding up. And again, bulk of that revenue, bread and butter, coming from the heat transfer segment, which apparently lost eight figures, over 10 million in revenue. So, in my opinion, that is a massive red flag. So, if we come over here, like I said, now we have to potentially look at the technicals. And like I said, in my opinion, potential descending triangle. And we had, again, a slight break today. But even if you use this top trend line, you're looking at like mid-morning, midday Monday. So even if we hang out here and potentially retrace above this trend line, we could potentially break Monday and drop back down into the low 80 range. So definitely something to keep an eye on, but the MACD seems to be slowly climbing over the last couple of weeks, even though the stock is slipping and remaining flat. The RSI basically completely flattened out, as you see, at about 30 and a half. It's right around that benchmark. So this is why I appreciate the fact that people were maybe looking for that pop here. Because the RSI reached that benchmark point, they may have figured that a lot of traders and investors may start repiling back into the stock. It got beaten up. The RSI's down here at the benchmark. Boom, we're ready for the rebound. Mid-Bollinger Band on the daily, 135. So I can appreciate the fact people were looking for that breakout, looking for that pop. But like I said, in my opinion, looks more of a descending triangle as opposed to a descending wedge. And again, a descending wedge is bullish. We hit the apex and we break up higher. A descending triangle is bearish and we break down and go lower. So only time will tell, but in my opinion, again, even with the RSI here at the benchmark, potentially getting ready for a little bit of a rebound reversal here, I personally would not be a buyer of this company. And I mean, as I said, I don't really personally like Chinese equities in this current environment. But even putting that aside, I always said that I did like a stock like Alibaba because the numbers do seem to be pretty consistent, pretty stable. And like I said, the company does share buybacks and all that stuff. So on paper, that company, pretty decent. This company, unfortunately, it's still very new, right? So we need to give it more time to see, was this just a rough year? Did they have a couple of, bad months? Is everything going to turn around? Is the business going to be fine? Or maybe you could make the argument, who knows? Maybe their business, some of their segments are starting to see steady declines now. So maybe you can make the argument, oh, they might have waited too long to go public. But again, only time will tell. The next number's not coming out till September. But in my opinion, I really wouldn't be a buyer. And let's see if we can check some pivot points here. And we can see next support is 44 cents on the daily. I'm not exactly sure if we will see that low of a number, but I do know the bottom Bollinger Band is 60 cents. And even 60 may be a little low, but I did show you that if this is the bottom support trend line, we're going to be looking at low 70s, potentially 70 cents inside of about the next week or so if we do break down out of this descending triangle, if that's what is truly forming. And then you're going to have to keep an eye on this bottom trend line here, again, February 29th, connecting to the bottom of March 27th, which would eventually meet up with a hypothetical new bottom that would be taking place maybe in the next week or so. And then you would have to, like I said, keep an eye on this trend line, because if it breaks below, then we could potentially see that 60-cent mark. But overall, in my opinion, unfortunately, really, really bad couple of months here for JL, in my opinion. And I think that they may have seriously dropped the ball. And to see the big volume come out and everyone just jump ship and get out while they still can, in my opinion, I appreciate that strategy and I do understand it and I do actually agree with it. So, again, I know some people may be upset because I'm saying that your stock isn't going to the moon, in my opinion. But again, this is just my opinion. But I, It just becomes difficult sometimes because a situation like this just needs more time. And if you do feel for any reason that the stock is about to hit a bottom, there's going to be momentum coming in, you're seeing $2 in the next 3 months or something, then hey, leave it down in the comments section. Leave your opinion, leave your price target. I'm always open to all different viewpoints. But again, I'm looking at how many shares that they own themselves. I'm seeing this random dividend. Revenue dropped over 30%. And in my opinion, this is just not adding up. And I just believe it will get worse before it gets better. And I'm going to end it there. Because, again, the company's only been around a couple of months. So I just feel like we need to give it more time. And if we want to come back maybe mid-end July around that lockup period and see where it is and do a quick update, sure, we can do that. And of course, we could potentially come back to it around the end of September as those next numbers come out. We can do another update potentially as well. But yeah, right now, in my opinion, I do see many more red flags than green flags. So I personally, in my opinion, would not be a buyer of JL. But like I said, if you're involved, if you're hoping for good things, if you think 3 to 6 months from now the stock's going to rebound, let everyone know down in the comments section. And I'm going to end it there. So once again, this is Stocks by the Numbers. I want to thank you guys for stopping by. If you have any questions, comments, or concerns, drop it down in the comments section. I'm usually very quick to reply. Thumbs up algorithm helps me get more eyes on the channel. And of course, subscribe to the channel. That is our handshake agreement. That is how you help me help you. But more importantly, moving forward, like I always say, I understand that markets are rocky and volatile and very uncertain. So I want to wish all of you success. I hope everyone makes a couple of dollars. Thanks for stopping by. Have a good weekend.